Crush it with Maizex canola. Maizex Seeds is 100% focused on Canadian farmers. Your source for high-performance grain, silage, and grazing corn, as well as soybeans and, new for 2026, canola. Visit Maizex.com to find your local Maizex representative. Welcome to the RealAgristudies podcast, the show where farmer voices meet the power of data. Here we break down the latest research from producers, dig into the trends shaping agriculture, and turn insights into action. Now here are your hosts, Shaun Haney and Justin Funk.
Welcome to another episode of the RealAgristudies Insights Panel podcast. Myself, Shaun Haney, and Justin Funk. Justin, how are we doing today?
I'm doing very good, Shaun. How are you?
I'm doing great, and I'm looking forward to today's discussion. You know, we do these Canadian Farmer Sentiment Index surveys, and we really appreciate all the farmers and ranchers that step up and answer the questions. It sheds so much light on what's going through the minds of farmers at that given time. And one of my favorite things to do is look at what's going on with the CME Purdue Ag Barometer and comparing and talking about that. And I love to do that with audiences in some of my keynote presentations I do on both sides of the border. And today, Justin, we are joined by Michael Langemeier. He is the director at the Center for Commercial Agriculture and also a professor at the Department of Agricultural Economics, of course, at Purdue University. Michael, how are we doing?
Pretty good. Glad to be here.
Yeah, awesome stuff. So, Justin, let's walk through some of the numbers here at a high level, and then we can really talk about what's at work and at play here.
Sounds good, Shaun. So for some of you, this may be your first time experiencing our Canadian Farmer Sentiment Index. So I want to take a moment and explain how we get to the results that you're about to see. So the Canadian Farmer Sentiment Index is built on the same model as the Purdue CME Ag Economy Barometer. So we ask the same questions the same way to very similar types of people. One of the big differences is we do ours quarterly, where, Michael, you do yours every month. Isn't that correct?
Yes.
Yeah. So we look at our results every 3 months as opposed to every month. But the idea is to measure how these results change over periods of time and also given the changes that are happening in the market environment around us. So what I'm demonstrating here is this line that we call a neutral line of 100. And anything that falls above this line is what we would consider to be positive sentiment, and anything below the 100 line would be negative sentiment. So in looking at the questions that we're going to dive into today, the first one is looking at current farm financial performance. So do you feel that your farm today is better off or worse off or about the same as it was 12 months ago? And when you look at the numbers that we have been tracking really since September of 2022, we're just showing the numbers going back a year to July of 24 to now July of 25. You can see with the blue numbers are the Canadian index and the green numbers are the American index. Going back to a year ago, we saw that the Canadian index had a much higher number at around 84 than the US index at 63. But then as we move forward and we go to the new year around January, that was the last time we saw the Canadian numbers higher than the American numbers. And things sort of flipped when we got to April of 25, where now the American numbers are shown in the 80s and the Canadian numbers are down in the 60s. So you think you're going to notice as we move forward here a little bit of a flipping of the script, so to speak. When we move forward to the future farm financial performance, we saw very comparative numbers in the mid to high 80s, in the July of 24 timeframe. But gradually we started to see a bit of a divergence as the U.S. numbers started to breach the 100 mark here now at 113 in January of 25, while the Canadian numbers stayed in the 80s and started to decline into the 70s. Now, we do see in July of 25, the U.S. numbers dip below that 100 number at 96.
And in Michael, in August, that number went even further lower, right? It went from like 96, didn't it like dip to like even 92 or something like that, or?
Yeah, I haven't looked at the most recent number relative to this chart, but I think you're right on that one.
Yeah.
Yeah, so it weakened a little bit in August, the U.S. number.
Yep. Okay, that's what I thought.
So in looking at the optimism towards the ag economy, here we're looking at a 12-month outlook on the ag economy, and very similar numbers, January and October in the high 50s, low 60s. But then all of a sudden in January of 25, you see this huge divergence where the Canadian numbers drop to the 30s and the US numbers bump up to the 90s. Still not into positive territory, but significantly more positive than they were in October. And you can see that they remain higher than the Canadian numbers, but declining, into sort of the high to mid 70s. Now, moving into the future of the ag industry, here we're looking at widespread good times or widespread bad times, more in a longer term outlook here. And here's where you really see a big difference. One thing to note, Michael, and I'm not sure if you've noticed it at all, but the Canadian numbers have always been negative. We have very little positivity here, but it's dramatically pronounced when you get into January of 25, when the U.S. numbers skyrocket up to in the 120s, while the Canadian numbers continue to decline into the 70s and the 60s, and now resting at 62. So that's pretty negative sentiment right there. The only question where we see very similar results all the way through, yet very negative results, I will add, is when we look at the confidence in making the farm investments, the willingness to make those farm investments. You'll see that in our latest intake from July of 25, we're at 55 and the U.S. index is at 53. So within a margin of error, that's pretty much identical. So, this is a look at where we're at right now, and the comparative results that we have seen over this 1 year time frame. And, we're really interested to get your perspectives on what you see here. We talk about this all the time in Canada, but we've never really had an opportunity to engage with you to discuss, why these differences exist and, what are some of the factors that may be causing some of these trends.
Yeah, and Michael, what's at work here in the U.S. as you look at the U.S. numbers? What's your observations?
There's two things that I think that are going on that are very important to note. First of all, the Ag Economy Barometer and most of these indices that go into the barometer increased rather dramatically after our election in November of 2024. And that happened when Trump was elected also in 2016. And so optimism went up after that election, and we asked quite a few questions related to why. Why was there so much optimism, after he was elected versus before? Before people were quite pessimistic in September and October of 24, and then the index increased rather dramatically in November, and it stayed elevated. And we point to several different things. First of all, our farmers are always concerned about regulations, and they think regulations are going to be, slightly less onerous, if you will, under the Trump administration. So that's very important. But they also think that the long-run policy environment's going to be more positive. They did receive some supplemental payments, the agriculture producers in the United States in December. And so they did receive those. They may or may not have received those if their election turned out differently. In the one big beautiful bill that passed this summer, the farm safety net was strengthened. And so some of their thinking related to a better policy environment is actually coming to fruition. But that's really one of the things that's really impacted sentiment is this idea that we're going to have a better policy environment. I want to talk briefly about tariffs and trade. When it comes to trade, this is all part of my policy discussion here. When it comes to trade, producers realize that our current trade negotiations and tariffs are going to be negative for 25 net farm income. When we ask that question, a lot more people think it's going to have a negative impact on their net farm income in 25 versus a positive impact. However, when you ask the question, do you think the trade negotiations that are going on are in the long run going to strengthen or weaken U.S. agriculture? They overwhelmingly say strengthen. And so again, I focus on that long-term policy environment. They're more optimistic regarding that. The other thing that's going on, and I'm curious to see how this might be impacting your index, is one of the big groups that we survey is livestock producers. We got to keep in mind that when you look at crop producers, our net returns for 24 and 25 and projections for 26 are not good. It's going to be very rough period for crop producers, regardless of the crop that you look at. But for livestock producers, particularly beef producers, they haven't had better times in years. And so that particular group is very optimistic relative to the crop producers, and so they're helping keep up this sentiment higher than it would be if we focused on exclusively crop producers. And so I'd be curious to see what percentage of the producers that you survey are livestock producers, specifically beef.
I don't have that number off the top of my head, but it's the same. It's the same impact and sentiment you're talking about. You talk to a rancher right now, and boy, they've never seen times like this. One, they've never seen prices. Margins are definitely in their favor. And it's kind of a generational moment. I don't know how else to really kind of describe that, but the cropping sector is immensely concerned. If you look at the Canadian producer, they're concerned about, well, obviously trade issues with the U.S., but there's also trade issues with China, and that's impacting their ability to export. Canada being much even more so reliant on exports than the U.S. farmer is, for sure. Canada's only a population of 40 million people, right? And we produce a lot of stuff in Canada, and it all can't be consumed here, else we'll be eating a lot more lentils for breakfast, lunch, and dinner, for sure. And just like, I think your point about the political overlay here also applies to Canada. Remember, Canada had an election in the spring of 2025, and that hasn't helped. You have two things going on. One, the U.S. administration is politically aligned with the U.S. farmer for the most part. It's the opposite in Canada. Canadian farmers vote Conservative, and the Liberals won the last election, and so that has also impacted, I think, some of the results in the opposite direction, as one would expect. Justin, what are your thoughts there?
I would completely agree with that. One of the other factors that we have seen too, and I'm not sure how deep you go in your analysis, Michael, but larger farmers tend to be a little more optimistic than medium-sized farmers. And I'm not sure why that correlation exists, but it does. And we also see more optimism among younger farmers as well, which I do think is encouraging. But, I think that in that case, experience impacts perspective.
Yeah. And
we don't report those results on a monthly basis, but we have done a couple of special surveys where we dig deeper into that exact topic, and we see the same thing. The larger producers are definitely more optimistic, and another group that's definitely more optimistic, and I don't know if you've asked this question before, is we ask a question every February, and we've also asked it on some special surveys. Does your farm intend to grow? And then we've got buckets. Yep. One of them is stay the same size. Another one is reduce size. And then we have buckets related to farm growth. And consistently, we see that about 50% of the farms that we survey intend to grow in the next 5 years. Those people are much more optimistic, just like you'd think they would be, than the people that are not expecting to grow. And so one of the things that fascinates me as I dig into the Ag Economy Barometer data in the U.S. is how much difference there is among the producers. It's just enormous. Regardless of the question you look at, there is so much difference in optimism and pessimism among the producers. It's not just farm type. It's not just farm size. It's just there. And I think that's also true of Michigan's consumer survey. And so I think that's just kind of the nature of the beast here. You've got people look at the world through different lens. And I wanted to speak briefly on that future of ag industry. Our producers have typically been fairly optimistic with regard to that question compared to the other questions. And when you talk to farmers in the U.S., for the most part, they're pretty optimistic long term. They get very down short term, like they are right now, the crop producers. But they've been through this before, because we have a lot of farmers in their 50s and 60s, and they've been through this before, and they have confidence they're going to get through it.
Yeah. So on the point about the buckets of, is your farm staying the same? Is it growing? Is it shrinking? Justin, we've asked questions like exactly that, and if I remember correctly, we found the exact same result as what Michael's talking about.
Mm-hmm. We have. And we've also seen, we look at what generation you are on the farm as well, looking at separate from age. Where are you in sort of the hierarchy? And that influences how people answer questions as well.
Yeah. And so what's really at work here, I think for those farms that are the most optimistic, one of the realities that I think people are going through with these tight margins on the cropping side, and the margin, the expected margins are actually, if you look at, compare USDA data to some of the StatsCan data, the profit loss situation is worse in the U.S. The worst of all is the forecast for what's going on in the Delta with cotton growers. It's minus
Yes.
like $400 an acre. Like it's nothing. It's like nothing else that is of any of the other crops. When you walk into your banker to do your loan renewal or go through your year in review, it's great to be optimistic, but the numbers are what the banker that calls the tune for what happens going forward. And so I was saying to a group in Nebraska last week, one of the challenges here is that optimism is not collateral.
No.
And it's kind of like loan renewals could be a very touchy issue for some farms when they go talk to their banker here at year end.
Yes, and we asked a couple questions in the latest survey, the August survey. Actually, we asked some questions related to loans, and we kind of combined answers from two different questions. First of all, we asked farmers whether they expect to reduce, stay the same, or increase their operating loans, and so that's the first question. And those that expect to increase their operating loans, we asked them the reason, and we have three buckets there. We have expand the farm, increase cost, and we have unpaid operator debt. And what we're trying to get at there is that unpaid operator debt. How many people are increasing their loans because of unpaid operator debt? And that combination, which I feel is a proxy for financial stress, increased dramatically. Even from February to August, we asked the same question in January. In January to August, increased dramatically, particularly for crop producers. And so it goes directly at what you're talking about here. Whether you're optimistic or not, if you're dealing with low net returns and if you have a high debt to asset ratio, which producers that have less experience might be in that situation, or producers that rent a large portion of their acreage, this is tough conversation with the banker. You just have very little wiggle room because if you have equity, as we know, you can fall back on that. But if there's not much equity on that non-current side of the balance sheet, I don't know what you do because 26 does not look good.
No, it does not. And I know I was looking at the ag, what do they call it? The Ag Economist Monthly Monitor that that Tyne Morgan does with I think it's like 65 ag economists. You maybe participate in that.
I participate in that too.
Yeah. And so what's interesting is that is agriculture in a recession? What I found interesting is that I think in July it was like 53%, but previously a couple months earlier it was like 75. The number had gone down, and a lot of the open-ended reasons that economists gave was that until land rents or land values start to maybe shrink a little bit, it's hard to argue that we're in a recession. Would you share that sentiment, or?
I actually answered that question that we were in a recession because I was thinking about that question a little differently, and I was thinking about that question as from a crop production standpoint. And that's what I put in the comments. From a crop sector standpoint, we are definitely in a recession. I define that as very low income. When you look at the average net farm income per acre in 24-25 and projected in 26, it's the lowest we've seen since before 2007. So that's how I define a recession. I think financial stress is a different topic. I think we're also seeing a lot of financial stress in the crop sector, but when you combine the two sectors, because the livestock sector is so important to U.S. agriculture, when you combine those, it doesn't look as bad.
Yeah.
And so when you look at things from the national level, you look at U.S. net farm income, it can be very deceptive until you really dig under the hood and see if there's problems in certain sectors. And so that's how I thought about the recession. I realized that livestock sector is no way having a recession, but if you look at the crop sector, they definitely are.
Well, to add to that, USDA came out with some income forecasts, and net working capital was liquidity was expected to increase. And at first glance, you're like, well, what? But it's again that livestock factor that
yes.
There's a lot of cash being created, in specifically in the beef industry right now.
And it really, there's people from all over the country answer both, our survey and the survey, the other survey that we were talking about, the economist survey.
Yep.
But it really depends on where you're at in the country. I think if you had some people in the Southeast, they would say that we're in a recession. If you have people in the Eastern Corn Belt where we don't have much beef, we have some dairy, but that's more in Wisconsin, Minnesota. We would say yes. But if I'm from Nebraska originally. If I would ask somebody in Nebraska and Kansas, they might not think so because there's so many people in those Western Corn Belt states that have some livestock.
Yeah, and Justin,
from a whole farm perspective, it doesn't look as bad as if you're a corn soybean producer in central Indiana.
Makes total sense. And Justin, when we do the East-West comparison on current farm financial and future farm financial performance, it's a little bit more consistent, it seems. We're a little bit tighter to each other.
Yeah, in recent iterations of the study in particular, which is also interesting because, we also see a lot of farm size differentiation. We measure farm size by acres, but we also do by income. And income helps to, I think, take out some of the east-west bias and also look at the entire enterprise, not just the crop side of it. But yeah, we've often seen differences, and some of the other things we see differences, but recently in the indices that we're measuring here, the differences have not been that dramatic east to west. And of course, we don't look at things north and south. We're going east and west.
Yeah, I guess we could in the future. I just don't think it would show any difference, at least to the same extent as the U.S. Numbers. Michael, confidence in making farm investments, and maybe Justin, just what we're asking here is right now a good time to make a capital investment? It's not will you make, is now a good time to do that. Is that correct, Justin?
That's correct.
Yeah. So we're both countries in July are like 55 and 53. So we're neck and neck. And previously it was 60 and 61. So both countries very negative. Michael, what are U.S. farmers telling you in terms of right now as a time to make capital investments?
This, if my memory serves me right, I'm not sure this has ever been over 100 since we started. If it was just for a few months. Okay, so they're usually negative when it comes to this, but there's degrees of negativity. And one of the things that happened that's really still surprises me is this one also bumped up after November 24. And to me, that doesn't make any sense because particularly from a crop producer standpoint, is there a worse time to be buying stuff as now? I don't think in the last 10 years of this survey, there might be 2015, some period during 2015 when we first started the survey. But this is a pretty bad time to be buying machinery, and this index is actually up from about mid 30s to mid 50s. Part of that's livestock, but not all of it. Recently we did a separate paper, and I'm going to publish that in FarmDoc here in a couple weeks, hopefully. We did a separate paper looking at sediment for livestock and crops separately. They both had a low index. I thought, well, that's going to explain part of that increase is, livestock producers are buying machinery. That's not the case. And so I kind of scratch my head over this question, exactly what people are thinking about when they're answering the question. And then also, to make this even more complicated, it's not clear to me whether they're thinking short-term or long-term. Even though the question kind of reads short term, how much of this optimism with regard to long run policy is impacting this question? I don't know. I think it probably has to impact it somewhat, because machinery is a long-term investment. Even though we think about machinery, we're thinking about machinery purchases in terms of a cash flow standpoint. They may be thinking both short-term and long-term when they're thinking about this. So this question here is always a puzzler.
Yeah, Justin, what are your thoughts?
Yeah, I have a question for you. Actually, two questions. One, do you ever do cross-question analysis where you look at how somebody answers the farm financial question relative to how they answer the willingness to make farm investments question?
No, we don't. We haven't not dug into that. Probably should.
Yeah, we do that just out of interest, and it is what you think it would be. Those that are suggesting they're in a better financial position, seem to have a higher degree of willingness to make farm investments. The other question that I had for you was this, and this is more, I think, just anecdotal than anything, but do you ever get criticism on the question, like the farm investments, where you just give people two answer categories and not a middle ground? Because this is something that we will often see in our open-ended comments. It's not frequent, but, people will say, I might have answered the question differently if there was a neutral answer. And, we try to address that when we do our dissemination of the results by saying in some of these things, we want to test the extreme. Like it's very black and white. It's either you're in or you're out kind of thing without giving the neutral ground, because as well as I do, you give somebody a neutral option and often they'll take it just to make it easy. I'm curious your thoughts on that.
That would be an interesting point. I wonder if the answer would be different if you used a Likert scale, maybe 1 to 5 or something like that. My guess it might be.
Yeah.
You might get because good and bad are extreme. And if you had more choice there, it was some more choices in the middle that might change the way they answer that question. So that's a good point. I really haven't given that as much thought as I probably should.
Well, for what it's worth, I'm less inclined to do it because I know that when you do give people a neutral answer, you'll get very neutral responses or results, and then you don't really learn anything that way. So I prefer the black and white. I think it's different with the farm financial questions because I think it's fair that you can be better off, worse off, or about the same. But when you're predicting the future on what you think is going to happen, I think that forcing people one way or the other is a wise way to do it.
Well,
you're probably right. And probably on some of these questions, if you give them a middle ground, they're going to pick the middle ground.
Yeah, exactly.
It's sort of like when the airline sends you, how do we do? Yeah, neutral.
Neutral.
What's interesting on the making farm investments is, although if you look at just focus on equipment as a component of that, although both countries, farmers in both countries are saying the same thing, it's not a really great time. We're at 55 and 53. The reality is the Canadian farmer has continued to buy new farm machinery. If you look at those AEM numbers as an example, right? I think we're actually a little bit higher than at the end of August compared to a year ago. Well, the U.S. numbers like combines and four-wheel drive tractors are like minus 35, minus 40% relative to last year, which was down from the year prior in terms of sales. So it seems like the at least on new machinery, the U.S. farmer has followed through on bad time to make a purchase, I'm not doing it. Where the Canadian farmer has been not a good time to purchase, but I'm going to need to upgrade my fleet or for whatever reasons. That's where there is a little bit of a separation.
Yeah, and I wonder if there might be some differences in between the two countries in terms of whether they typically buy new or used machinery. One of the questions we added about a year ago is, do you typically buy new or used machinery? And 2/3 of our respondents, month after month, is about the same, buy used machinery.
Yeah,
and so a chunk of our people, even we try to survey full-time farms. A chunk of our people typically buy used machinery. Well, that's just a completely different market than the new market. Even if the new market is struggling, sometimes the used market isn't struggling as bad.
Yeah. Well, this has been tremendously insightful. This has been a lot of fun. We're going to need to do this a little bit more often. Because this has been really awesome time being able to understand kind of the differences and the similarities. And as two countries that farm up against each other, there's producers that actually farm in both countries. I can think of a handful of people that do that. Of course, we're going to see a USMCA CUSMA trade renegotiation at some point in the next 12 months, which is going to obviously probably increase the tensions a little bit. But farmers are definitely facing some of the same challenges as well as the opportunities. So it's a fun comparison. Indeed. So, Michael, want to thank you for joining us here today. Really appreciate it.
I always enjoy talking about the Ag Economy Barometer, so invite me back anytime.
Oh, great stuff. And Justin, again, big shout out to our Insights panel for continuing to step up. And if it wasn't for the Insights panel, we wouldn't be able to have these kind of conversations with Michael whatsoever. So big shout out to them.
Yeah, and be on the lookout for our next Canadian Farmer Sentiment Index survey, which will be coming in October of 2025. So be on the lookout for that and be sure to provide us your thoughts.
Great stuff. If you want more information about some of the work that Justin and I are doing, you can go to RealAgristudies.com. If you have questions, comments about some of the things that we said or what Michael responded to, you can send me an email, shaney@realagriculture.com. Thanks a lot, everybody, and we'll talk to you again soon.